How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data that was collected on July 16, 2019. Here's a snapshot of the positions held by the institutions on that date. Well, let's take a look at gold and the positions that the institutions have been holding. Well, what can we see here? Well, when we take a look at the data, we can see that longs are pretty much aggressive, and they have been for the last few weeks. In fact, here back in July, on July 2nd, we start to see them taking profits on their long positions, thus reducing their overall exposure to the long side. Now, at the same time, when we take a look at short positions, they've gone from 53 to 61 to 64 during the course of these candles going sideways here, basically in a range-bound motion. All right, so we see they declined from 312 to 306, now a little bit higher to 309 right before this slight increase in price. But I want you to stay focused on what we're also seeing with the shorts, because we see them increasing shorts. Now, does that mean it's going to turn over and drop? Not 100%, but there is this idea that we've been holding very near and dear, that price is going to have to turn down for it to regather long positions. The reason why we believe this is because we examine the long positions and we see that they're aggressive with their longs, so eventually they're going to have to take profits, and when they do, it's going to cause price to drop. And if they knew that that was going to take place, they would want to start to accumulate a short position to take advantage of that move. So we see a couple weeks back, long exposure was 85%. It has since dropped to 83%. So we still got some work to go until we see a bigger decline, but that is what we are waiting for with gold. And now we move on to oil, and we can see that they have increased from 505 to 545 after some major profits being taken all throughout here. We start to see them increasing longs. Well, that comes as this green candle pushes right into the weekly supply area. Okay, what happens when price hits supply? It usually reacts to the downside, which is exactly what took place here. Alright, so it is likely that we're going to see a continuation of a move to the downside. We see an increase in shorts from 115 to 121 right as price was hitting that supply. So this could have been in anticipation for that drop. Likely that is what it was. Bottom line, looking at longs, we can see they're below average of 565. Shorts are pretty much sitting at average. And yeah, expecting more downside. So far things are looking pretty good. Now we take a look at the US dollar, and we see that they did pretty much nothing with their long positions and just closed off some shorts. That increased long exposure to 80%, and that came as price was reacting from the weekly area of supply. So with the weekly area of supply in play, that is likely price is going to drop, which it did somewhat, but we would typically expect things to do that. Although the dynamics on the chart aren't exactly what we would want for a move like this, and we detailed that in the latest Forex Market Outlook video that we did on the 19th. So let's stick by what we're seeing here. We're not seeing any strong signs of what the institutions are going to do next with the dollar. So let's move on to the Aussie. Now, if you remember, when price was down here, down in the weekly area of demand, we were expecting some profit taking on shorts, which is exactly what took place. 108 to 96, 93, you could see the decline, a steady decline. Okay, now we're at 84,000, which is well below the average of 93. And we look at longs, and we can see that the last 4 weeks they haven't really been doing much. Yes, a big decrease since the profit taking on longs, 43 to 30, but now we're at 31, so it's really not doing much in terms of long positions. Why is that? Well, I believe it's because they're not really focused on accumulating a long position. It's more taking profits on those shorts. Now, we are looking for a trade signal to get in short at some time, because we do know that the higher time frame forces are pushing price down like this. So eventually we want to engage in this market alongside them, but we're going to let them do their thing in terms of taking their profits, and then when we see prices ready to continue to the downside, we'll re-engage in that market. Now we look at the US CAD, and as price was consolidating here at the tested weekly area of demand, we see that they increased longs from 39,000 to 42,000. But take a look at this. This is what I want you to see. From 48,000 to 63,000, that's a massive jump, causing shorts to be aggressive. All right, and we also take a look at the long and short exposure, and we see 60% of their overall exposure is geared to the short side. So you see a big shift here from being bullish to now being bearish. So this is supporting the idea of price moving lower. All right, so we're seeing that in some of the other dollar pairs. This is one of them that I want to point out to you. Now we go over to the Swiss franc. Okay, here's the other one that's giving us signs that price wants to decline. By looking at the market dynamics here, we know that momentum is shifting to the downside. So now we compare that with what we're seeing with their positions, and we see that their longs slightly increased, but shorts also decreased. All right, from 7.1 to 5.9. Big drop in short positions. That causes long exposure to go up to 75%, and that was as price was reaching the highs before the drop. So very bullish back here, neutral, a little bit bullish because of the increase in price, but we're basically leaving bullish territory. Okay, that's what's been taking place here. Leaving bullish territory. Used to be very aggressive with longs, not any longer. Okay, so let's take a look now at what we see with the euro. The euro is also a little bit of a tricky one, but what did we say about this weekly area of demand? That it was legit, and we should expect a move to the upside, and so we got that upside move, and that was caused by institutions increasing their longs from 158,000 to 170,000. Big increase. They also increased shorts from 194 to 201. Bottom line is long exposure jumps up 1 point from 45% to 46. Taking a look at short positions, they are below average, and longs are above average. This is typically what happens before momentum shifts in the opposite direction. So we're still sitting and watching, because we were very aggressive with shorts, we're becoming less aggressive with shorts, and now we're starting to see an increase in aggressiveness with the longs. So this could mean that we're going to see that move to the upside. Next we have the pound, and what do we see? Increase in shorts as price was dropping and testing into this tested weekly area of demand. Bottom line is we see somewhat aggressiveness here with the total size. Total size right now is above average. It's starting to become a little bit more aggressive. We could expect more profit taking on short positions, which would cause price to rally upwards like that. Next we have the US dollar Japanese yen. We know momentum is shifting to the downside. And if we take a look at what was taking place as this candle was being formed here, we see that they increased longs from 38 to 44, and they also decreased shorts from 35 to 32. That causes long exposure to jump up from 52 to 57%, but that again was after this slight push upwards. So that is probably reflective of that push to the upside. We know that the bias is to the downside, and we are looking to engage in this one to the downside as well. And so last but not least, we have the Kiwi dollar, and we got this rise up in price as we were expecting, because they needed to take profits on short positions. When you take profits on short positions, it causes price to move up, and that's what took place. We see short exposure 72%, a slight drop, but that's okay. 32 to 28, so profit taking on those short positions. And a slight increase in longs. Longs are cooled off right now, so they're not focusing on longs. Right now it's just all been about taking profits on short positions. We're also looking to engage in this one short. We're waiting for those signals to appear, and when they do, we will engage in them. So that's it. That is your CFTC report for July 16, 2019. If you need more information about how we do our analysis, you can visit www.whiteoakfx.com. Thanks, and have a good one.